The company we're going to talk about is the Emerson Electric & Co. They are in the New York Stock Exchange. The number of shares of common stock outstanding is 650,026,583. The industry they are in is the industrials, the sector electronic and electrical equipment, and the country they are in is the United States. The industry overview and competitive positioning. The main competitors are Schneider Electric, Honeywell, and General Electric. The Schneider Electric, they are optimized through digital transformation, engineering cost and time up to 80%, maintenance cost up to 55%, and carbon footprint up to 50%. Honeywell opus revenue $2.85 billion, R&D expenditures $1.8 billion. As of 2018, Honeywell is the world's fourth largest conglomerate with an estimated market value of more than $100,000 billion. General Electric operates in more than 180 countries, equips 90% of power transmission utilities worldwide. Software manages more than 40% of the world's energy. The Porter 5 Forces analysis. Rivalry, highly competitive market. Buyer power. Buyers can put firms under pressure to lower prices. New entrants. Emerson holds strong barriers to entry. Supplier power. Emerson has multiple suppliers for each of its business units, not significantly dependent of anyone. And substitutes, the low cost eliminates much of the propensity of customers to switch to alternative firms. The SWOT analysis. The strengths. Diversified product portfolio. Strong penetration in variety of product lines. Strong brand equity and brand name worldwide. Almost a monopoly in field instruments, segments, and asset management system. Industry leadership. The weaknesses. Relatively high cost of R&D, loss of revenue base due to rationalization of operations, high bargaining power of big customers. Opportunities. Invest in adjacent product segments, new customers from online channel, opening up of new markets because of government agreement, enter new emerging market, decreasing cost of transportation because of lower shipping prices. Threats. Volatility in end markets with fluctuating exchange rate and raising local manufacturers. Intense competition in fields like industrial automation, network power. Political and economic risks associated with international production facilities. Emerson's financial analysis. Leverage ratios. Total debt ratio and long-term debt in percentage. Emerson's leverage ratios are lower than its competitors, with the exception of Schneider Electric. This indicates that the General Electric, Schneider, and Honeywell last year implemented index to finance the operations, while Emerson declined in 2017 and remained practically the same index value. Cash coverage ratio and debt burden. Emerson presents a high and growing cash coverage ratio, indicating its ability to pay the interest expense. Low debt burden until 2017. Activity ratios. Accounts receivable turnover. Accounts receivables turnover, when comparing Emerson accounts receivable turnover ratio to its competitors, there is a wide difference over the years. By 2015, the company collected less than twice its receivables in relation to its competitors. However, over the years, the company has overcome this difference, and in 2018, Emerson collects its receivables more times in the year, 6.45 in comparison to its competitors. The profits and services of the company differ in some aspects, which makes the comparison not fair. Talking about Emerson's average inventory turnover is higher than that of its competitors, indicating that the company sells far more than its competitors in a given period of time, which is very good for business because the holding foot of the company will be lower. Although the company's profit is not as high as that of its competitors, this can be explained by the fact that the company has less inventory because of the service that is provided, such as automation solutions, for instance. Talking about total assets turnover and fixed assets turnover, Emerson, in comparison to its competitors, presents a high turnover, indicating its ability to generate sales from its total assets. Since 2016, the ratio is growing while that of its competitors has fallen and only rebounded in 2018. In addition, this shows that the company can operate with fewer assets than its competitors, requiring less debt and equity to work. Fixed assets turnover. Emerson's fixed assets turnover ratio is above the average of its competitors, indicating that the efficiency of the company is generating revenues from the investment in fixed assets. Cash conversion cycle. Emerson is within the industry average. General Electric is outlier for taking about 130 days to perform the conversion, but this can be explained by the fact that companies sell different types of products and services which, despite being from the same industry, have different demands. Emerson showed an increase of approximately 10 days in 2017, which is not very favorable for the company because it will take more time to convert its inventories and other cash resources into cash flow from sales. Liquidity ratios. Current ratio and quick ratio. Current ratio, despite having a good growth from 2016 to 2017, the ratio always showed good results. Emerson will pay short-term obligations, that is, the company has 1.79 current assets for each dollar of current debt in 2018. If we look at the average of the competitors, the company is only behind General Electric. Quick ratio. Emerson's ratio was quite variable, while of its competitors showed small variations but were always able to meet the obligations, with the exception of Honeywell in 2018. Emerson presented a ratio of 0.73 and 0.72 in 2016 and 2018 respectively, not being able to pay their current liabilities with highly liquid assets. Profitability ratios. Operating margin. General Electric showed significant declines and began to recover last year. However, Emerson has seen small declines since 2016, while other competitors have slightly increased their respectable margins, indicating good return on sales. Profit margin. Emerson presents a good profit margin, which grew in 2018 after a subsequent fall of 2016. Which was small when doing a general analysis of the competitors. Profitability ratio, ROI. Emerson shows great results not only by itself, but even better when compared with its main competitors, who fall short. We can say that Emerson is very effectively managing the company's assets to create profits. ROA. Emerson has by far the higher return on assets when compared with its competitors. 2018 showed particularly better results for the majority of the companies except for General Electric, which reached its lowest on the period. These results show that Emerson is efficiently using its assets to generate earnings. ROIC and WACC. When ROIC is higher than WACC, value creation, Emerson's managed to have higher ROIC on most periods except for 2017. Honeywell, Schneider Electric, and especially General Electric failed to do so more often. Working capital. When compared to its competitors, Emerson shows less liquidity, especially in 2018, which showed extremely low numbers, because they sold assets that were held for sale. When it comes to General Electric, maybe the company should be investing some of their money as they are holding more liquid assets than they need to pay off short-term bills and to internally finance their operations. EVA. The only year that Emerson's ROIC was lower than the WACC was in 2017, as mentioned before. As we can see, that resulted in a negative economic value added. There was value destroyed. It's important to notice that the only company with a positive average economic value added was Emerson, showing not only good results but consistent results too. MVA. A high MVA is evidence of effective management and strong operational capabilities. We can note that Emerson is not the one with the higher MVA, but still it shows consistent growth. A low MVA can mean the value of management's actions and investments is less than the value of the capital contributed by shareholders, which may be the case for GA.
To forecast income statement, balance sheet, and cash flow, we consider some assumptions already made by the company or allocate the resource based on the company's accounts ratio. The year of 2021 and 2022 had no assumptions, so we assimilate to the company's average sales growth of 2.5%, considering it a linear growth. In cash flow, the accounts that were not detailed follow the pattern of allocation or the degree of average growth related to the data found in the income statement.
Conclusions. Main findings. Profitability. ROA and ROI that are higher than their competitors, which indicates the company is doing well. Efficiency. Emerson is very efficient with their assets. They hold great values on almost all ratios and have the ability to turn their assets into sales and their sales into profit. Leverage. Emerson presents a high and growing cash coverage ratio, indicating its ability to pay the interest expense. Liquidity. The company is not the most liquid one and rates fluctuate through the years. Conclusion. Emerson Electric is not only a market leader, but it also is a good investment opportunity. The company performed well through the years and it's expected to keep showing good results.